Good morning and welcome to the Killik and Co market update. Markets had a really strong bounce on Monday this week following the announcement from Pfizer that the company has developed a coronavirus vaccine that is 90% effective. Some doses of the vaccine are expected to be available at the end of this year, with a further 1.3 billion doses available in 2021. So let's take a look at exactly how markets reacted. On this chart here, we've got the US's S&P 500 index in the pink, and in the green we've got the UK's FTSE 100 index. Both of these indices are shown over the last 12 months and they're indexed, which means we're looking at the percentage returns. So as you can see, both indices had a very strong bounce on Monday, but if you look closely, you can see that the performance of the FTSE 100 was actually slightly better. The reason being that the FTSE 100 has more to gain from a potential vaccine. And that's because the FTSE 100 is heavily exposed to companies that have been really hard hit by the lockdown. For example, oil companies, banks, travel companies, whereas the S&P 500 contains more companies that have actually benefited from lockdown, for example, technology companies. So let's take a look at some of the big stock movers on Monday. On the top row here, we've got companies that performed well, including drinks company Diageo, oil company BP, and British Airways owner IAG. On the bottom row, we've got the losers, including delivery company Just Eat, online supermarket Ocado, and video conferencing company Zoom. However, despite the big moves of all of these stocks on the day of the announcement, the ones on the top row are still heavily down over the last 6 months, whereas the ones on the bottom row have still made significant gains over the last 6 months. When we're putting this video together, we sometimes look at Google Trends, which show us the level of interest in particular search terms on Google, and it shows us what people are interested in that particular week. Clearly this week there has been a high level of interest in searches for the word vaccine, but on Thursday this week, YouTube went down for 2 hours globally, and the level of interest in the search term YouTube is down was far higher than the level of interest in the word vaccine. Here's a chart that we've taken from Google Trends, and it shows the level of interest over the last week in the search term YouTube down versus the search term vaccine. So YouTube is down is in the green and vaccine is in the pink. And as you can see, the spike in YouTube is down is far higher than the spike in vaccine. And for us, this was really just a helpful reminder of exactly how popular YouTube is. It's owned by Alphabet and it has 2 billion monthly active users. It's the second most popular website in the whole world, and every day 1 billion hours of video are watched on YouTube, and that is more than Netflix. Last week we talked about the growing success of online advertising, and YouTube is one of the reasons why Alphabet has achieved such success in online advertising over the last few years. There have been various bits of news relating to green or sustainable finance this week. The UK is clearly setting itself up to be a leader in green finance, and our Chancellor Rishi Sunak is expected to announce the first green gilt next week. A green gilt is essentially a government bond that will raise money specifically to be spent on green infrastructure. At the same time, the FCA has announced that from the 1st of January 2021, companies listed in the UK will be forced to disclose the expected impact on their businesses of climate change. And additionally, the FCA is conducting an ongoing investigation into greenwashing across the fund management industry. The FCA defines greenwashing as marketing that portrays an organisation's products, activities or policies as producing a positive environmental outcome when this is not the case. There have been problems with greenwashing across the fund management industry. Investors are really interested in ethical and green investing at the moment, and there have been a number of funds who have claimed to be green or sustainable, despite the fact that the funds contain things like fossil fuels. So it's good that the FCA is starting to address this issue. Moving on to have a look at the week ahead, we've got results out from Experian, SSE and Nvidia. That's it from us. Have a great weekend, and we'll see you next Friday.